Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. Today, we're hosting Michael Boyd, Head of Research at Energy Investing Authority. Michael, good morning. Thank you for joining us. We're looking forward to this one.
Great to have you. It's good to be back talking with you again.
All right, fantastic. So, 2023 has been interesting. If you look at the oil prices and you look at some of the large cap stocks like Exxon, I mean, it's been a nice year. But some of the stocks, some of the smaller companies, they've been kind of muted. Do you have any commentary, big picture on the market? And what are some of the things this year, Michael, that have surprised you?
I think for sure, just starting with that kind of aspect, with like Exxon price performance and everything like that, I think, the market in general is still getting a little bit of comfort kind of coming back into energy, right? So it was such a beaten down sector for so long. I think we're starting to see some institutional capital kind of flow back into the market as a whole and energy specifically. So, I think it makes sense for them to kind of start where they, have a foundation and a groundwork and start with the larger cap companies. I think, as, the energy space kind of evolves over the next several years, we'll start to see a little bit more comfort kind of roll down into kind of like the mid caps and the small caps again. I think like the last time we talked in January, I was bullish natural gas versus crude oil. So I think that's probably maybe the biggest surprise coming into 2023. I think that's just driven by OPEC and the Saudis and where we're kind of sitting on global inventories versus natural gas, where we definitely have had some oversupply in the United States. We've had some, LNG outages that have really kind of like crimped demand. Weather is always a factor. So I think that's, the kind of like the driving force that's kind of made crude oil so much more interesting this year versus natural gas. And that's something I've had to pivot around and react to as, macro fundamentals have changed.
Yeah, no, it's certainly an interesting market, and it depends on what corner of the portfolio that I look. If I look at one of my big MLP positions, which is Energy Transfer, of course I'm long there. I've been trimming recently because of that merger, and we
Right.
appreciate your commentary on the merger with Crestwood. What were some of your other like sort of bigger winners or sort of exciting stories that you were tracking so far?
Cosmos Energy has done really well on a year-to-date basis versus the rest of the market. Cord Energy is another one as well. I think for Cosmos, I think like, some of the Tortue news has been like a little frustrating where we've seen things kind of push back out and delayed just a hair. And then we've had, some kind of like the knock-on impacts from, having BP as a partner in that. That's a little bit frustrating to deal with. But, at the end of the day, they still have some leverage on the balance sheet, which is nice when oil is kind of reacting as it is. And they've had, great exploratory well results in the Gulf. And, Ghana is really taking off for them as well. And, first gas is kind of like right around the corner from Tortue, right? So we're starting to see a little like inflection point where they're going to be spending less on capex dollars and getting more free cash flow. And I think that's something that's really been highlighted by a lot of like the investment banks lately, right? So I think Bank of America, they just upgraded Cosmos the other day and moved the price target up to $10. So I think you're starting to see some of the bigger investors kind of react to what we've kind of known for a little while now, where the story is kind of changing for Cosmos. And I think, for Cord Energy, it's just kind of the same story we've been talking about, where the Bakken is just a little underappreciated. Everyone thinks it's drilled out, and they continue to have really good well results there. The merger has gone well with Whiting, and they picked up some acreage from XTO, which is an Exxon subsidiary, recently at a good price. So good capital return story. So patience there has paid off, and they're doing really well relative to some other names and peers.
Yeah, no, it makes sense. Thanks for the update. Michael, the offshore and oil services stuff, I mean, it's been on fire. Admittedly, that's kind of the marriage between our two segments, right? Is there
Yeah.
anything interesting in that field for you? Anything you're watching?
Yeah, I think in general with like offshore especially, I'm not as well versed kind of equipment versus, actual onshore production. But I will say that I think it's a very interesting kind of like spot, right? I think it kind of mirrors like heavy equipment, oil field services in a way. You're starting to see all these kind of below market charters kind of like roll off for a lot of that equipment, right? So there's a lot of kind of contracts penned when the market was basically dead, and people basically taking whatever they could to justify kind of like not cold stacking these things and kind of keeping them like out in the field, right? Because reactivation fees are so expensive, especially in the offshore market. I think we're in a situation where there's a lot more kind of like demand for that equipment back then. And you're starting to see day rates rise, and I don't think they're high enough quite yet to support new supply or new builds either. So I don't think these day rates are going to go back down, especially if the oil market remains supportive. I think it's an interesting spot. I don't think it's necessarily, if you looked at it from a free cash flow perspective for a lot of these companies for like this year or even like next year, I don't think it's necessarily attractive given how aggressively they've run, especially. But if you have a constructive view on where day rates move from here and they can kind of stay at those levels for quite some time, then it gets a lot more interesting, a lot more investable, so to speak.
All right, fantastic. I know we went a little bit over time. Appreciate you. Thanks for joining us.
Yeah, perfect. Thank you so much.